So you've searched for properties in the Lower Mainland, clicked on one of our Facebook ads, or filled out a form, which has led you here to vancouverhomesource.ca. One of us has already tried to make contact with you, and we've set up a personalized saved search for you to start receiving only the property listings that match your specific needs. You may have also already completed an exploratory tour of a few properties with me. You should be noticing that these simple steps are saving you hours a week searching for homes, and the feeling of actually purchasing a property is more real now than ever before. If you found any of these services we provide useful so far, then you're not going to want to miss the rest of this video. Hey, it's Ryan Flynn again from vancouverhomesource.ca, and today I'm going to chat about mortgage pre-approval. And if you stick with me until the end, I'll give you the information you need to successfully start the mortgage pre-approval process. So you've done your homework, you have a rough idea of how big a mortgage you can afford. Now it's time to get formally pre-approved. A pre-approval may include a specific term, interest rate, and the maximum amount you can borrow. With this in writing, you're ready to seriously go out and start house hunting. Making contact with a mortgage broker is the best way to get the ball rolling. Your mortgage broker will ask you for specific information that they know lenders require to make a decision. Typically, the three most important factors lenders will look at are your credit score, your down payment, and the debt service ratios. Credit scores can range from 300 to 900, and ideally you want your credit score to be between 680 and 900 points. This is seen as a good credit score and means you would satisfy most lenders' credit requirements. The next group is the range between 600 and 680. So this group here is a group that has an average credit score. So depending on the rest of your details of the mortgage application, they may qualify you for a prime mortgage or they may not. The final group are those Canadians who find themselves with a credit score below 600. They will still qualify for a mortgage, however, it will most likely be with a B lender at a higher interest rate. So now let's discuss what determines your score on this range, and there are two main factors. The first one is fairly simple, simply making sure that you pay your monthly bills on time, and the second one is ensuring that your credit balances are low in comparison to their limit. So for example, if you have a $5,000 credit card, then you should make sure that your balance stays below $2,500 or 50% of that credit limit. This is what determines your score on the range. The second factor for qualifying in Canada is the down payment. And to help us explain this, we're going to assume that a Canadian has just bought a home for $450,000. If this person plans to occupy the home themselves, the minimum down payment is 5%. So in this example, the value of the down payment would equal $22,500. Now, if this person wants to avoid paying CMHC insurance, or if it's an investment property or rental property, then the minimum down payment goes up to 20%. So again, using the same example of $450,000 value home, the down payment would increase to $90,000. And these are the minimum down payments required for qualifying for a mortgage in Canada, depending on the specifics of your home, of course. The third and final factor that lenders look at when determining if you can qualify for a mortgage is debt servicing ratios. And to help understand this concept, let's look at an example of a household where Mary's earnings are $60,000 and her husband John is earning $45,000 a year. So this household has a total annual income of $105,000. The lender will then compare this income to the monthly expenses that household incurs. They are likely to have existing expenses such as their car payments of $400 and maybe some debt that is still left over from when they went to university, and any other recurring expenses like this. The lender will look at the income and the expenses and determine if there is enough net income to service all the debt after the addition of a mortgage and property tax expenses. And that's the overview of mortgage pre-approval. If you're feeling overwhelmed by all of this new information, don't panic, because a good mortgage broker will guide you through this process one step at a time. And I'm here able to help answer any other questions that you may have along the way. Thanks for sticking with me until now. As a bonus, I'm going to give you the details of who I personally believe to be the best mortgage brokerage in Vancouver's Lower Mainland. The good people at Silverman Mortgage have helped many of my clients and me personally with pre-approvals, and their service is great. They operate completely independently from me, and I'm only offering their information because all I want is the best experience for you. Contact them here or find out their details in the description below. Remember to like and subscribe if you found this video useful. Until next time, see ya.